Folks, I'm going to talk about two stocks that are heating up for the second half of 2020. That's right, the year is finally halfway over. And I can honestly say that during the past 6 months, the stock market experienced some of the biggest moves in history. And it's not over yet. The first half of the year brought us trade war and the worldwide pandemic. And the second part of the year will bring us the presidential election. Any ways you look at it, the markets are extremely volatile and searching for directional bias. We've seen the biggest downside in history, followed by the fastest recovering tech and consumer discretionary stocks, while blue chips and traditional safe stocks are lagging behind. Go figure. In my opinion, the second half of the year is going to be a bumpy one indeed, with plenty of surprises to keep investors and traders on their toes. I believe that the predominant force in market action over the last quarter has been a reaction to what happened in February, when the major markets lost big, and over the next few months, the markets will finally begin assessing the long-term consequences of COVID-19. Earnings are substantially lower, and second wave of COVID-19 is going to cause substantial distress to businesses around the US and the rest of the world. This is why right now is the best way to trade and invest is to have a solid plan. Pick stocks that are not being hurt by COVID-19 and focus on companies that are showing steady growth despite the massive slowdown in the current economic cycle. Also keep in mind, the Fed is putting trillions of dollars into the economy, and liquidity that's provided is going to keep the market stable over the next several years. And that's why I'm focused on stocks that are going to be around for decades to come and offer investors growth and momentum over the near term. Now, the first stock on my list is Palo Alto Networks. Ticker symbol is PANW. There's been a major trend in cybersecurity long before COVID-19 started, and the trend is increasing with the added use of computers thanks to the stay-at-home environment and natural technological growth. Most people are turning to the enterprise cloud, and the cloud security is becoming increasingly advanced. Palo Alto recognizes this and is making a major business transformation by de-emphasizing traditional firewall products in favor of subscription-based cloud protection and support. You've heard me talk about subscription models in the past. They're really hot right now. Subscription models is the future and creates sustainable and predictable income for large tech giants. The subscription model also provides margins and cash flow visibility. The stock is showing very stable long-term growth. 5-year revenue, 384% plus. 5-year earnings growth, 173% plus. There's 16 strong buy recommendations and short-term price target of $300 per share, making it an attractive buy at the current price levels. Relative strength is solid, and cloud security is a very stable and fast-growing market segment. And Palo Alto is doing everything possible to capitalize and position themselves to cash in over the near term. The next stock on my list is from a totally different and unrelated sector and industry. It's about as opposite as you can get. The company is called Green Thumb Industries, and it's over-the-counter stock with ticker symbol GTBIF. I know that's a mouthful. Let me say it again, GTBIF. Now, there's a major reason why I'm becoming increasingly bullish on pot stocks. And the reason is COVID-19. I believe the economic impact of COVID-19 is going to be so big for some states that bringing in a sustainable source of revenue may be the only option, even for states that have been opposing marijuana legalization for the last several years. Also, there's a major shift in sentiment from the public, and the stigma surrounding marijuana and the world, it doesn't view it as pot, as a hard drug like heroin or even alcohol. That's a major change from just a decade ago. So let's talk about Green Thumb Industries and why I like the stock. First, it's a vertically integrated operation. It controls the entire process from seed to sale of cannabis. Currently, there's 46 open dispensaries with licenses to open up as many as, get this, 96 retail locations in 12 states. We're talking about the marijuana Walmart, right? What I truly love about Green Thumb is the fact that they generate roughly 2/3 from their revenue from derivatives, such as edibles, vapes, and topicals. Derivatives have a higher price point and bigger margins than traditional dried flower. And this segment of the industry is growing extremely fast. The company has over $50 million in cash and generated about $216 million in sales in 2019 alone. I'm expecting these numbers to continue increasing and the stock ending 2020 on a very positive note. Momentum levels are promising since the stock erased most of the downside from the first half of the year. Expect prices to rise to about $17 per share if the company continues growing at the current pace over the next few quarters. Hope that helps. Folks, I've discovered a completely new market phenomenon worth $5 trillion. Yes, $5 trillion. And for the first time, I'm ready to reveal all the secrets that I've been hiding about this bulletproof trading strategy. In fact, these secrets could consistently make you thousands of dollars every week. That's right, thousands. And the best part? You don't need to be an expert at predicting stocks. Heck, you don't even need any trading experience at all. All you need are the secrets behind my money magnet strategy. Click the link below to learn how you can get started now.